18 October 2023, Wednesday, MAO with Cal. Wow, it's been some time we do this MAO. Hope you didn't miss me, yeah? Okay, so the thing is this, the statistics actually shows that the bullishness in the stock market could continue. That is based on the statistics that we have right now. So I'm not changing Win, but the numbers do show that the bullishness can continue, but I have my reservation. So to me, it's all right. We do expect a big movement coming on soon. All right, so let's go into details. Now, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, so let's take a look right now in the market first. Okay, first of all, you can see that Bitcoin, is it time to buy Bitcoin? Now, many people have been asking me that, is it time to buy Bitcoin? And I said that, well, Bitcoin, if anytime it goes back to 20,000, it'll be a good time to buy. So apparently Bitcoin briefly spiked up by 10% recently after a false report saying that the SEC actually approved the BlackRock spot ETF, Bitcoin ETF. Now, this is an ongoing thing that people have been speculating, and I can only tell you that it's just a matter of time this approval will get done. So you can see right now the Bitcoin spike up to 30,000 as of 2 days ago before pulling it back. Now, the question is this actually a time to accumulate? And I tell you that my personal take is yes, okay? This is showing that the boys are actually buying into Bitcoin. That is very clear. Hence, therefore, I believe that any pullback on Bitcoin will be a buy. So I'm pretty bullish for 2024 on Bitcoin. So if Bitcoin can pull back to even lower, if we come down here, that will be the best time to buy, about 25,000 to even 20,000. That is how I see for Bitcoin, okay? All right, moving on. Now, one thing is that recently the IMF, all right, World Bank Meeting, they actually conducted it, and of course, there was a lot of key takeaway. But the scary part is this: they actually says that it's a limping economy right now. As a matter of fact, due to the Israel and Hamas conflict, sees global economic growth slowing from 3.5% last year to 3% this year, and 2.9% next year, and that is really a revised downwards. Now, global inflation has definitely came down from the 6.9 this year to now about 5.8. The thing is this: the central bank signals a readiness to end interest rate hike if the events allows. But of course, to think about this, if they want to follow what US Federal Reserve wants is 2%, we still a long way to go. So to me itself, right, we still have a lot of things to settle, including a debt squeeze. Now, the main thing is that right now the domestic bank is tightening. Definitely tightening, and you can see that it's tightening very strongly. And of course, the general market condition is really not that fantastic. So in the past itself, when the banks tighten, you can see that the condition actually goes down below the negative zone. So where are we right now? We are actually in the negative zone for quite a while. So if every time when the bank tighten, you can see that every time we will see a recession. So I'm kind of confident that we are already in recession, even though the numbers are not really showing it, because there's a lot of massaging of the numbers, in my opinion. And of course, if you look at it right now, this is the bank tightening versus the Fed fund rate. You can see that every time when the Fed fund rate starts to go down, this is actually the point whereby you can see that it starts to go down, right? Just wrong color, moment. Okay, when it starts to go down, all right, you can see that that is also where the banks start to really, stop their tightening. So when the banks start to tighten itself, that was where the Federal Reserve will cut interest rate. You can see that that is where the recession will come in. So this is a perfect cocktail to tell us that, look, we will have the bank they'll stop tightening, but because recession is nearby, and when the recession hits itself, then that is where the Federal Reserve will start to cut interest rate. So in fact, whenever the Federal Reserve cut interest rate, is a very telltale sign that recession is actually near around the corner. So that's the reason why I'm still confident to tell everyone in my life that be careful, we're going to see a recession very soon, all right? So look at this now. This is the CPI in blue versus the real gross domestic product, the GDP. You can see right now very clear that the consumer price index is coming down. So that's why the inflation is seemingly coming down. But if you look at it, right, when this is happening, they both usually move in tandem. So every time when the CPI data goes down, the real gross domestic product actually comes off. So now we're having a bit of this divergence effect, but to me, it's just a matter of fact that this gross GDP may come down again. And if that happens, that will definitely trigger a recession, because it happened before in 1990s, happened before in year 2000 and 2008. Now, at this junction here, you say, Kel, they all are negative. So where's the bullishness? Well, this is the part where the negative so-called end for this video. Let's look at the bullishness right now. Now, we all know that the Magnificent Seven almost basically takes up 30% of the S&P 500 market cap. Yeah, who are the seven again? We have the Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. So these seven companies basically take up 30% of the S&P market cap. So you can imagine the remaining 493 companies take the remaining 70%. So as long as these seven companies are doing fine, there's no way the S&P can fall. And of course, that is how they're trying to hold this ship right now. Now, you look at this is the NYSE margin debt percentage growth. You can see that we are now at the recovery stage. And almost every time when we get the recovery stage itself, the US stock market usually will go up. And that is one key point to take note. It seems that now everybody is kind of bullish right now, and this is actually feeding the market. And of course, look at it. This one is from Bloomberg, where stocks have potential to catch up the profit upgrade. Now, this is going to be a bit of controversial here. Now, you can see over here, the blended forward EPS, right, is up. And the current S&P now is at the bottom. So by right, a lot of analysts are saying that the S&P will recover and go back to 4,700 by end of the year to chase after it. But on this same note itself, right, if you look carefully in the past, we have a different thing altogether. Now, this is where it is. This is where the S&P was, and this is the earnings EPS. All right, you notice that the EPS actually continued to go higher, but the stock market went lower. So, of course, if you look at it, at this junction here, the EPS is high, stocks are low. So it's the same thing, right? So by right, we should have this one going up. But based on what you're saying right now, but what happened? The stock market continued to go lower while the EPS goes down. So it's not too sure whether the EPS is leading it or the S&P is leading it. Somehow, someone is not telling the truth. And that's the reason why I suspect that we will see a big movement coming up in the near 2-3 weeks. All right, but based on this thing here, this chart here, it shows that, right, although the market is expecting a recession coming in, but it's likely to be about 2 years later. All right, and as a matter of fact, right now, half of the people believe that this recession wouldn't be coming. And in fact itself, the statistics shows that the comparison to S&P performance in the last 12 months, it seems that, right, that usually at the October period, we should see bullishness overall. This is like 30-10. So the thing is, that's why people are saying that maybe in October, once you see a bit of low end, we should start buying. Now, do note, tomorrow will be 19th October. That is the day in 1987 where the stock market crashed. So I don't think we'll have a crash tomorrow, but still, I believe there'll be big movement coming in the next 2 weeks. Hence, therefore, please be careful. As you can see right now, this is gold prices right now, and it seems like we have a short squeeze. In fact, right, you can see that whenever the gold, the managed money net position for gold futures was at a negative 2 weeks ago, and that's whereby we saw gold shot up to 1930 2 days ago. So when everybody is shorting the market, you can see that the gold will recover as we're up by 10 to 30%. So that's the reason why I believe that gold this time around will hit the 2016 level. Now, I'm very bullish in gold, and I think that when everybody is so bullish in gold, gold can go up. So 2016 is my target for gold for this year itself. Current price for 1930. So I think that this should be able to go higher. All right. So this is something to take note for all the gold bucks outside. And of course, the thing is this, you can see right now the small cap PE have come down to a pretty good level. Now, the same time it happened before was back in 2008, whereby it came down to around this area here, and that was where the bottom is. So undeniable, there's a lot of people saying that now we are below the average, hence therefore for the small cap it's time to buy. Now, do note the reason why the small cap is at a lower level, because remember, as I said earlier, the S&P 500 now, basically the 30% of it is run by, is already lead by the 7 magnificent shares. So that's why it's many small counters like those Russell 2000, 3000, those are the very low end. So a lot of people feel that this is a good time to buy. Now, for me itself, yes, it's cheap. Yes, it's good to buy, but I just feel that, right, we can have it a bit lower. So if the price can go lower, so wouldn't it be a better buy? That's how I see it. So to me, if the market do go lower, then I think then that will be a very good time to buy and invest. What do you think so? All right, now one thing is that we must take notice is a major SPR issue right now. the US Strategic Petroleum Reserve is actually now at a very, very low end. And the thing is, this White House still doesn't seem to be interested to cover their position. Now, we know that White House dumped the crude oil back then to lower down inflation, but inflation is still sticking at above 3%. Hence, therefore, we have known that crude oil price has recovered quite a fair bit. As a matter of fact, right, crude oil hit $95 about 2 weeks ago, and that's where we call for a sell, and indeed it came right down. But recently, we noticed the boys are buying into gold again, buying into crude oil again. So the thing is this, we did a Fibonacci on the market, and you can see very clearly right now, let me show to you that, okay, we take the highest point recently and the lowest point, and we do a Fibonacci. We can see that right now at the 50% mark is where the resistance is, $88.53. It has got itself resisted already. So if the market do break $88.53, we can see crude oil testing the very important $90.14, 61.8 level, right? This is going to be a very important level to watch for the market. Now, if the market really stop there and pull back, fine. But if the crude oil blasts past 90.14, then I believe that we'll see $92 within the next 2 weeks. And of course, this would actually propel it to go even higher. So to me, it's that crude oil should be able to hit 102 level by the end of this year or earlier. So that's something that I've been telling my friends to take note of this. Of course, the crude oil can't be going in a one straight direction. There will be pullback, but I feel that recent sell-off itself is preparing for a bigger upside buy. What do you think? Let me know in the comment box. I'd love to hear more from you. All right, so that will be all for today's video. Thank you very much. Please like and subscribe and share with your friends. This is Cal signing off. Take care. Bye-bye.